Just up about 60 points, as you can see. A couple of highlights. Alcoa is down about 4%. We told you BHP Billiton said no thank you. Rio Tinto saying no thank you. That's holding the Dow back a little bit.
And there's a live picture of the floor of the New York Stock Exchange. The Dow up 62 points. Blue chips edging back toward that 14,000 mark. We'll see if the bulls get the final word today as we enter the final and the most important hour of the trading day. Hi, everybody. Welcome to the closing bell. I'm Maria Bartiromo, along with my colleague Dylan Radigan here on the floor of the New York Stock Exchange.
Welcome back.
Thank you.
You're looking very summery, very lovely, very sorry.
It's hot out.
It's
hot
nice
in here.
right?
63-point move in the
Plus,
Dow.
and then you're going to be out there tomorrow. It's going to be summer on the streets.
Absolutely.
I can't believe you've been committed to do this. It's madness with the rain and the whatever, but you've been doing a good job. Anyway, let's do this thing. The market benefiting from the technology turnaround today. The chips were beaten senseless yesterday, but IBM's earnings today spectacular, and as a result, the chip stocks are off and away, and they seem to like more or less the Fed minutes at this point.
You know what? Very important to take note of the financials today. I'm going to have more on this later on in the program, but the financials down across the board. Banks and brokers under pressure today. That is keeping a lid on things. So we've got the Dow at 13,983, largely due to the market coming in because of the weakness in financials. Alcoa, another loser today. Article on the happenings with the recent deal with Rio Tinto and Alcan.
Right.
So we got that. Here's the Dow, as you can see there, up 69 points. Check out NASDAQ. We've got the NASDAQ also higher, but off of the best levels of the afternoon here. NASDAQ Composite, as you see there, on the upswing, and the S&P 500 we go to with a gain on the session of 5 points. Standard & Poor's 500 index stronger, as are these averages, as we continue talking about 14,000. Bob Pisani here.
How you look lovely as always.
So
hey, we'd be over 14,000 if it wasn't for the financials, as you have noted. We've got to get somebody talking to Mr. Bernanke over there, folks. Let's take a look at what's going on in the middle of the day. It's been a great day if it wasn't for the financial stocks. Here's the story. More weakness on the Federal Reserve's comments overall. The FOMC minutes came out in the middle of the day. Kind of hawkish on the inflation concerns. That dropped the market a little bit about 2 o'clock Eastern time. Then we've got additional weakness in the corporate bond market. That's also weighing on things, you know, the concerns about the subprime mortgage issues. Overall, though, the broad market's holding up very, very well. Techs are doing great today on IBM's terrific earnings, and all the other groups are to the upside as well. Mr. Bernanke did testify this morning. He did mention comments about the subprime issue. He said significant losses from subprime could be expected. He put a number on it, $50 to $100 billion. Certainly that's an important number, but it's not a shocking number overall. Still, the markets did drop. The financials dropped on that. Today, we got a lot of discussion about MF Global, a big IPO that happened here earlier in this morning. This is the futures and options brokerage arm of London hedge fund Man Group. The talk was 36 to 39, priced at 30, opened at 27. As you can see, an obvious mispricing here. And that's got a lot of people talking. Publicly traded private equity stocks like Blackstone, for example, and Fortress are at new lows here today. Speaking of Blackstone, guess what's coming tomorrow? An offer that Blackstone bought a year ago, and that's Orbitz. Remember that? Orbitz is the online travel marketplace. They're expecting to price 34 million shares between $16 and $18. Folks, don't you remember? They were public before. Here's Orbitz, the cliff notes. They went public way back in December 2003 at $26. September 2004, they acquired by the Ascendant Corporation, $27.50. Then last year, 11 months ago in August, they were acquired by Blackstone. Now they're being taken public again. We'll talk more about that tomorrow. Let's go to Rebecca Jarvis standing by over at the NASDAQ.
Thanks, Bob. Great day for tech, especially networking stocks. You see Juniper shares up 12% right now. Great earnings story there and an outlook. Also getting upgraded at Goldman Sachs, and you see its chief rival Cisco getting a little bump as well. Intersil, on the other hand, that's kind of the weak earnings story of the day, down 1.7%. That company also, though, having a good sales quarter, and that's thanks to end market demand in computing. Clearwire partnering with Sprint on a joint nationwide development of a broadband network, and you see their shares up 31.6%. Big winner. Also a winner, Broadcom, shares up 3.6%, partnering with Verizon on a licensing agreement for mobile phones. They'll report after the bell as well. And Google, we're going to hear from them after the bell. Got eBay's earnings not so great today. Google, no fireworks expected there when we hear from them, but the big question is, where are the new sources of revenue going to come from as we go forward in the future? And Microsoft, new 52-week highs there ahead of their earnings. Dylan, back to you.
All right, Rebecca, thank you very much. Let's get out to the bond pits of Chicago. The Fed minutes out a little over an hour ago. Words like favorable and noisy being included in characterizations of the economy. Rick, what are they thinking?
Well, you know, Dylan, they're talking a lot about U.S. exports. The rise in global interest rates was cited as evidence of increasing global demand, and some participants noted to strengthen aggregate demand worldwide and its potential effect on the prices of imports and globally traded commodities as contributing to the upside risks to U.S. inflation. You know, folks, we all know that a week
activity down here, but nonetheless, everybody talking about this psychologically important number of 14,000. Interesting to note that it really is not the individual investor in this market. It is largely institutions. You've got the Fidelities of the world, the pension funds of the world, really in the market buying and switching allocations. That is what is driving things. Today, big story is the financials. All of the financials rolled over while Ben Bernanke was talking. A lot of worry about the subprime issues and the impact on earnings for the financials. That's why you've got the likes of Citigroup, JP Morgan, across the board, Bank of America, all down today. The banks and the brokers representing a bit of a limitation here. Also, you want to look at the asset managers and also Blackstone Group. Blackstone Group also under pressure again today. You got the asset managers, Legg Mason, Alliance, also under some pressure. Apollo Group, by the way, doing a roadshow to talk about its possibilities of taking that company public. We know that it's coming public at some point, perhaps on that Goldman Sachs exchange. It's doing its roadshow right now, and we are talking about financials a lot on Wall Street today. That's really been one of the big topics of conversation. Another trader I just spoke with was looking at the metals companies. You want to look at Alcoa as well as Freeport-McMoRan. These two stocks have been obviously in the news recently with all the deal making going on in the aluminum sector. There's an article out today apparently saying that BHP Billiton is possibly now looking at Freeport-McMoRan, and that has Alcoa down and Freeport-McMoRan up. So that's also really actively traded there. The metal stocks you want to be watching, as well as certainly the financials. But again, a lot of people say that once you do see the individual investor get in on that in the market, that's when people say, oh, could be a contrary indicator, and that's when you want to get out. We have not seen the individual jump in here, feet and hands first. At this point, largely institutional affair. Dylan, back to you.
All right, thank you, Maria. The story of the day, those Fed minutes, again, a slightly more benign and more broadly distributed in a favorable way characterization of the economy compared to May on the margins, and earnings from tech specifically. IBM up almost 5% on the day, and then the entire commodity materials space continues to build momentum. The question is, will the commodity and now technology advance be enough to push this market forward with the financials stuck as Maria just described? With us to have the conversation right now, Binky Chadha, Chief U.S. Equity Strategist, Deutsche Bank. Simeon Hyman, Equity Strategist, Lehman Brothers for their private investment management, both in the balcony here, and I welcome you both. Binky, last time we were here, things were a little bit more tumultuous. We've had a sort of consistency here. We're 10 points off of 14,000. Can it do it without the financials? Can the market maintain bullishness without the financials participating?
Two things. I believe that the market can maintain the bullishness without the financials. But I do believe that a big chunk of the financials, especially the diversified financials, are oversold and overreacted basically to events in the credit.
JP Morgan, Citi, Bank of America today have been weak. Do you think that they have been thrown into a category they shouldn't be in?
Two things I would say. Number one, there's clearly a risk premium going around coming from uncertainty about who's got the exposure and exactly how subprime and will spill over and how this will exactly play out. Number two, I think the best way to think about what's happening to the financials and the equity market from the credit markets is to think about the differential between what's happening to credit default swaps and what's happening to the high yield cash market. And there you see a very large disconnect. High yield spreads have barely widened, and that indicates that nobody's really selling. What the market has done is put on a big macro short, and the counterpart of that, development in the credit markets for the equity markets is really a big short on financials.
Yeah. And on the flip side, Simeon, evaluate what appears to have been working. The entire material space, the entire commodity space, the global build-out, China GDP today comes in ahead of already inflated expectations, and it comes in up beyond that. Now technology clearly coming online. Intel with some margin pressure, but absent that, looking good. IBM spectacular yesterday after the bell.
This is really, for us, a classic late bull market environment. you kind of have to be in it to win it historically, even in a period of somewhat slowing GDP growth, but not recession, a period of moderating earnings growth has been a very good time to be invested in the equity markets, and you really have to be on the growth side. You know, what's happening to tech today is not a surprise to us. If we're looking for surprise in earnings anywhere in the market, it's going to come from technology. So you got to be playing there to win it. The issue is that the clock is moving. So we're getting closer to the end of the bull market. So what we're encouraging clients to do is to look outside of the equity markets, to look into pieces of the private equity market, not the buyouts, but perhaps over-collateralized loans, mezzanine, distressed debt.
Well, hang on a second. Are you suggesting that we're setting up for what will become a restructuring environment in the next 18 months of some kind?
18 is not a bad number, just in the sense that if you look historically, from a peak of corporate profits as a share of GDP, the next 24 months have been pretty good for equity markets. We might have hit that at the beginning of this year. So you might say that somewhere in the 12 to 18 months range is...
That doesn't... Go ahead, Binky.
I was just going to say, I think one wants to be a little bit careful when one compares this cycle with past cycles. I think where we are at this juncture as basically, you know, the soft landing is becoming a reality. We have exactly only one example out of the last 11 of a soft landing. So we want to be a little bit careful about the past averages. And when you compare it to the last soft landing, which was basically the mid-90s, you know, that was the early stages of basically...
Well, but there's an argument here. I've already run out of time, so I'll be very quick with it. But there's an argument here that the new deployment of technology and the capacity to manage inventory in a modern economy is a different phenomena than inventory management. The typical economic cycle is inventory mismanagement, excess capacity or excess inventory comes online, overhang. The technology has backed that away. Is that a pie in the sky or not?
I think that's fair. In fact, cash yields are sky high because companies haven't piled onto the balance sheet like in the past. It could mute the business cycle.
Last word.
I think that's absolutely true for the manufacturing sector, and that's one of the reasons why there's a greater probability that we will have this soft landing.
All right. Benki, Simeon, a pleasure. Thank you both. Lehman and Deutsche represented in the balcony here today. We're looking at just under 50 minutes to wrap up our fourth trading day. We are sitting squarely on Dow 14,000. 13,999.35. Alcoa, JP Morgan, your two drags. Everything else has momentum. The NASDAQ, 24 points the advance. Technology strong. One of the nation's biggest banks making a move to tighten its lending standards. We're going to break down the subprime fallout with the CEO of Washington Mutual, the CNBC exclusive right after this. And then forget retail. Fast Money's Jeff Mackey putting his bets on Intel, pounding the table on tech. His latest move coming up next. And then after the bell, the former ExxonMobil boss, Lee Raymond, heading a new study showing oil supplies could fall short of demand by 2030. He'll discuss, what that means for the future of oil prices. It's an exclusive with Maria today, 4:30 Eastern Time, only on CNBC. But first of all, let's look at the most active names. Alcoa, down and away, 171. Pfizer, beat up a second day after its earnings disappointment. EMC, MF Global, and Advanced Micro round out your top five Thursday afternoon.
You're watching Closing Bell on CNBC, first in business worldwide.
Welcome back to Closing Bell. We all know it's been quite a record year for the Dow Jones Industrial Average. One of the reasons has been this furious pace of stock buybacks in 2007. Take a look at these numbers. In the first...
Always a pleasure, and have a good afternoon, all right?
Thanks, you too. Thanks very much.
Did you say more well?
I said...
You meant better, right?
No, when we were having it was in the context of the sentence that it made sense. I realized it was bad grammar.
I had to give you a
Listen,
hard
Rich
time.
Bernstein is a very intelligent, highly esteemed individual. He understood what I was saying.
He knew you meant better.
He knew what I was talking about. So did you.
Yeah.
And so did you. You knew. You just decided to bring it up anyway.
What's coming up next?
All right, come on. They're going to yell at us. They're yelling right now.
We're talking about
He's
technology
stuck
next.
in my head again. He yells any louder. I'm kidding.
The Intel trade. Find out why Fast Money's Jeff Mackey is high in the chip maker right now.
Plus, Wyeth beating profit forecast, raising its full-year guidance. We'll be talking healthcare with the president of Wyeth right here.
to the closing bell. We've got 20 minutes before the closing bell sounds on Wall Street, a market that is staying real close to that 14,000 mark. Check it out. Up 80 points on the Dow Jones Industrial Average, up 0.5%. You've got strength in the drug makers, the oils today. Noticeably absent from the rally, financials down across the board because Ben Bernanke talked about subprime issues. He was talking earlier to the Senate. There's the NASDAQ. Technology's hot, and it's led by IBM. Stock is up, heavily traded, and the NASDAQ-listed tech companies are following suit. S&P 500 also higher by about 7 points. That's 0.5%. Meanwhile, let's talk about the healthcare area. Drug maker Wyeth reporting earnings today. They surpass expectations. The drug makers earn so much. We appreciate it. We'll see you soon. And we'll take a short break. When we come right back, technology, name of the game. We're previewing today's earnings from Microsoft and Google out right in about 20 minutes or so. And then after the bell, SanDisk CEO Eli Harari breaking down the memory chip maker's latest quarterly results, giving us his company's outlook. We're also having an exclusive in the next hour with the former CEO of ExxonMobil, Lee Raymond. Back in a moment. Welcome back in the next hour here on Closing Bell. We have a trifecta of technology earnings on the docket. Microsoft, Google, Advanced Micro Devices all reporting their latest quarterly numbers. Let's head straight to the earnings central desk. CNBC's Jim Goldman standing by with a preview. Jim.
Yeah, and look at that board, Maria. All of them in the green, the good, the better, and maybe the ugly. Let's begin with Microsoft. Serious momentum behind Microsoft.
Tonight, still to come on the closing bell. Are we still on track for a big correction? Find out what Wall Street's top strategists are saying with the Dow at 14,000.
Also, after the bell, the National Petroleum Council reporting oil demand could outpace supply by 2030. We're going to talk to a man who knows a lot about the situation, former ExxonMobil Chairman and CEO Lee Raymond, our exclusive guest, telling us what kind of impact the study and the short
Promo exclusive. Former ExxonMobil chief Lee Raymond on the coming energy crunch and how to survive it. Next on CNBC.
There it is, 14,000 on the Dow Industrials with just 5 minutes to go before the close. We want to point your attention to a developing story right here on the New York Stock Exchange. This stock, American Home Mortgage Investment Corporation, AHM, taking a real sell-off haircut today. Down 17% of its value, $11.30 a share. The New York Stock Exchange just came out with a statement about this situation. It says, in view of the unusual market activity in American home mortgage investment, the exchange has contacted the company and requested that the company issue a public statement indicating whether there are any corporate developments which may explain this unusual activity. There have been a ton of rumors surrounding American Home today. And of course, Dylan, we know why. Subprime, the big issue on Wall Street. This is a mortgage lender, and people are worried that some credit has been pulled here, a line of credit. So we're watching that story. A lot of rumors surrounding it.
And again, this is a place that is ripe for speculation, as we know, the subprime area. Meantime, 2 weeks ago, we saw a record number of strategists bracing for a stock market correction. 2 weeks later, it's a different story. Here's Bob O'Brien under the radar.
Indeed, Dylan, just 2 weeks ago, the Investors Intelligence poll.
Countdown, take a short break, and we'll be right back.
And then after the bell, Sumner Redstone settling a family feud with his estranged son earlier this year. Now the Viacom chief experiencing a rift with another close family member. We're talking about family feuds in the media business. Coming up.
FedEx employee Rebecca Velasquez was about to leave.
All right, welcome back. 6 out of 7 up days in the U.S. stock market. Technology, very strong today. We hold on to this, it'll be the highest close ever, 1403.
Please close over 14,000.
Or don't, whatever.
No more lower thirds about Dow and over 14,000. Look, this would have been a great day, and it still is a good day, but it would have been a really great day if it wasn't for the financials. And the biggest problem that exists, no, believe it or not, it's not Mr. Bernanke, the corporate and the mortgage bond markets remain weak. Every day I get top lines from bond traders saying Corporate bonds weak here in the middle of the day. Mortgage market indexes weak in the middle of the day. That's really the problem. That's why financials every day start this droop in the middle of the day. So the brokers are weak. A lot of the banks are weak, even though Bank of America, for example, had very good earnings today. X that out. You got a great day in techs, you got a great day in utilities, you got a great day in
China
the transports.
GDP,
11%.
Almost 12. It was his forecast.
11.9, you're right. I mean, good heavens, and they've been trying to jawbone that economy down to the 10% range and not successful.
Looks like we'll go out 2 points shy of the 14 number, though. 13,997.
No!
It's fun. It's just numbers. As my friend Bill Fleckenstein says, it's like celebrating the 133rd day of the year. Closing bells rung. Here's Maria Bartiromo.
Hi, everybody. Welcome to the closing bell. There you saw it. A lot of cheers down here on Wall Street as this market treads right around 14,000. It is too close to tell where we're going to end out as things are still settling out. It is 4 o'clock on Wall Street, and the Dow Jones Industrial Average is at 13,998. With a gain of 80 points. We'll see if we end up at 14,000 as things settle out. Regardless of the round number, the technology earnings parade rolls on tonight, and we've got new record highs for the major averages. Google, Microsoft, and Advanced Micro Devices reporting the latest results any minute now. We've got the numbers, and we are going to continue to watch these companies trade in the extended hours, see if this is going to add to the momentum for tomorrow. Keep it right here for the results and immediate investor reaction. Then oil, one of the biggest stories in business. We've got one of the biggest global executives with us in an exclusive. Former chairman and CEO of ExxonMobil, Lee Raymond, my guest, coming up in about 30 minutes. But first up, a historic day on Wall Street today. 14K right at 4 p.m. Eastern. Lots of cheers down here on Wall Street at the New York Stock Exchange, with the Dow Jones Industrial Average cracking yet another major milestone tonight. Optimism about earnings growth for the second quarter, strong economic data thrusting this market forward. IBM by far driving the biggest gains for the Dow Jones Industrial Average. Check out Big Blue. It's at a 5.5-year high tonight. Momentum after the company's positive earnings numbers last night. HP and United Technologies also strong. SAP also doing well. The drags today, Alcoa down. $1.82, that was the biggest pressure on the industrial average, reversing course, falling nearly 4% late in the session. Rio Tinto's CEO earlier on CNBC saying any bid for Alcoa is, quote, off the table. That moving the stock today. The stock is down 182. Take a look at how we're settling out on Wall Street. It is 4 p.m. on Wall Street, and the Dow Jones Industrial Average sits at 14,000 and change, up 82 points, another all-time high, a new milestone for the blue chip average. We've got 7 all-time highs, reaching 52-week highs in intraday trading today in the Dow Industrials. That's American Express, Boeing, Honeywell, Hewlett-Packard, IBM, Microsoft, and ExxonMobil all tonight at 52-week highs. Those are 7 Dow components. That is what is driving this market. Optimism over earnings and the idea that we are in the middle of a global economic expansion. Check it out, 14,000 and a half, up 82.25 points on the Dow Jones Industrial Average. We've got all this market action covered for you and an A-list team to help you ride out this rally, make money in this momentum. Simshi's Bob Pisani, Dylan Radigan, Rick Santelli, Steve Leisman, Ron Insana, as well as money managers Tim Gursky and Mike Marcos. Bob Pisani kicks us off. We've got tons of Fed speak. Bob.
Thank you very much, Maria. And here we are, 14,000 exactly. It would have been a very good day if it wasn't for the usual weakness in the financials, folks. Let's take a look at the markets at the close here. 3 important developments here. Not really developments, but little news flashes. Number one, and the most important thing affecting the financials, again today, the corporate and the mortgage bond market weak in the middle of the day. This has been a theme that's been going on for several days now. Number two, Mr. Bernanke came out in his testimony this morning and saw significant losses from subprime. Not a surprising statement, but it was widely discussed on the desk. He put a number of $50 to $100 billion in the losses from subprime thus far. Then we had the Fed minutes at 2 o'clock. The Fed was rather hawkish on inflation concerns. That also dropped the market just a little bit, but it recovered late in the day. Look at the financials here. Bank of America had a very good earnings report. A lot of people were scrutinizing it for any comments on the mortgage situation. They did increase their loan loss reserves, but that is a common theme now for the banks. All the financials were weak. Again, Bank of America did beat the numbers. Lehman and Goldman, all the brokerages to the weak side. There's MF. Let's take a look at MF Global here. This is, of course, one of the big international brokerage firms that are out there, an arm of Man Financial. They went public here today at $30. The key here, $27 is where they were actually coming at, priced right at the open. Of course, that was a weak open. A lot of the big hedge funds had some concerns today. Blackstone, excuse me, was at a new 52-week low here. Finally, the tech stocks, not just IBM did great today here, but all of the big tech stocks, including Apple, Hewlett-Packard also at a new high. Maria?
All right, Bob, we should point out that things are very, very tenuous right here because it is 4:04 Eastern time here on Wall Street. And oftentimes you think the market's going one way and it actually changes direction as things settle out. So we can't confirm that we are closing at 14,000 until another 5 minutes, but it certainly looks that way with an 82-point rally. Meanwhile, we had tons of Fed speak today as the Federal Reserve Chairman Ben Bernanke finished 2 days of testimony before Congress, while the Federal Reserve released its minutes of the June meeting. CNBC senior economics reporter Steve Leisman all over those details. Steve?
Yeah, Marie, it's interesting the market did as well as it did while a hawkish Federal Reserve chairman took to the Senate today, explained why he's so worried about inflation, at the same time expressing greater concern about the subprime mortgage and housing market decline. Now, one of the only direct questions on monetary policy over the course of the 2-day testimony on the Hill, Senator Jim Bunning gets the award. He asked Ben Bernanke to explain what it would take for the Fed to be, quote unquote, convincingly demonstrated that inflation was under control. It was a direct reference to a new phrase that first appeared in the Fed's June policy statement.
The fact that the economy is working at a very tight use of resources. And secondly,
out with the numbers, the stock is under some selling pressure here. Let's get right to Jim in California. Jim Goldman's on the numbers with Google. Jim.
Yeah, they're just coming out, Maria, and we are working our way through them. At first blush, Google misses on the bottom line. The company reporting $3.56 in EPS. The street was at $3.59. I saw as high as $3.70. So really, just apples to apples, they're coming in 3 cents light. But the good news here is revenue, $2.72 billion. That beat the street handily, but let's take a little bit deeper of a look here and go into really the explanation as to why these numbers are coming out the way they are. Operating expenses way higher. Operating expenses $1.21 billion, a substantial increase over what most on the street were modeling. R&D $50 million heavier than Piper Jaffray, for one, was modeling. Also, marketing expenses much higher than anybody anticipated. So really, those are the reasons why the company is spending and spending big as it continues to grow its revenues. Gene Munster at Piper Jaffray, I just got off the phone with him, says, all in all, this is a good report, even with that bottom line miss, because it's all about Google's growth. And if they have to spend to get there, that is okay in his estimation. But he did say that the EPS number was a disappointment. I should also tell you, one of the barometers that we often use in determining whether Google is pretty bullish on itself is that hiring line. The company now says it has 13,786 employees. Do the math, Maria. This company hired 1,548 workers over just the last 3 months, and that truly is a staggering number. But you see the stock under significant selling pressure at this hour.
Yeah, all their competitors are going over to Google. They want to work at Google. Jim, thanks so much. Let's get instant reaction now on Google's quarter. Turn to Abjit Walia on the East Coast, and the blue chip is closed and settled out above the 14,000 mark. First time ever, boosted by strong earnings news. The Federal Reserve, meanwhile, signaled that a rate cut does not appear to be in the cards. Joining me now to talk more about that, Tim Grisky is Chief Investment Officer at Solaris Asset Management, and Mike Morkos is Portfolio Manager at Old Second Wealth Management. CNBC contributor Ron Insana, who is also Managing Director of Insana Capital Partners, also with me, along with Rick Santelli at the Chicago Mercantile Exchange. Gentlemen, nice to have you on the program. Welcome.
Thanks, Maria.
Tim, let me kick it off with you. Sure. Your thoughts on this record rally. What's behind it? Does it have legs for the rest of the year?
I think it does. I think we're going to see higher markets. Obviously, at some point, you're going to see a pullback, a correction. I think you hear people talking less about that, which makes it more likely to happen. But I think you don't fight this tape. I think the economy's in great shape. The Fed's very complacent. They're on the sidelines. This is a great environment for investing.
Ron, I think it's interesting to note who it is who's actually buying. This is largely an institutional affair. You don't have the individual investor there just yet. That's seen as a positive.
Yeah, I mean, typically, and not to condescend to individual investors, but historically they've been deemed to be late to the party, as are overseas investors coming into the U.S. equity markets. I don't necessarily always agree with that, but the smart money, Maria, for over a year has been betting that the stock market would go up not only last year but through this year. We have not had a down pre-presidential election year since 1939. The average gains in the third year of a presidential cycle are around 15%. We're well on pace for those. And as Tim suggested, the Fed, I think, is not only on hold but is handcuffed, because if they were to raise rates, they would create a credit market problem that Ben Bernanke talked about today that they'd have to deal with later by lowering rates. So I think they're kind of boxed in for a long time.
Yeah, no kidding. Let's travel to Chicago and check in with Rick Santelli. Rick, let me get this straight. Ben Bernanke talks today. The financials completely roll over. This market rallied to 14,000 even without the financials. Tell me what the buzz was on the floor there during the Bernanke talk.
Well, the buzz was the financials are weak in a way. When you looked at the Man Group IPO today, that says it all. That there's powerful entities that, whether they're brokers, whether they're toll keepers, or whether they're funneling money out to some of the leveraged areas that are holding subprime, it's an area people are nervous about. And when you continue to see that it's the multinationals in the Dow making fresh 52-week highs, and then you look at the minutes today, Ron said they're handcuffed in terms of raising. The weak dollar bringing in inflation, but good for exports, almost handcuffs them in terms of cutting rates as well.
All right, let's get to Microsoft earnings. We continue this conversation shortly, gentlemen. Stay where you are. We got to get to CNBC's Jim Goldman once again with the breakdown on Microsoft. This could be setting the tone for tomorrow. Jim, what do you got?
Yeah, indeed, and we've got a pretty good report here from Microsoft, Maria. The company reporting 31 cents on the bottom line, but that also includes an 8 cents charge connected to the Microsoft Xbox warranty, the $1 billion charge that the company is going to set aside. So you put that back in, you get 39 cents, and that's right in line with expectations from what the street was looking for. The good news here on the top line, we knew this was going to be good. Now we get a really good idea as just how good. $13.37 billion in revenue, 13.27 was what the street was looking for. So really Microsoft beating by about $100 million. Going on here to Q1 guidance, the company now looking for a range of 38 to 40 cents. That moves the midpoint substantially higher. The street consensus was 38 cents. The new revenue range might be a little lighter than people had anticipated, which is 12.4 to 12.6 billion. I heard 12.5 billion is the midpoint range. So kind of light there, but really by and large, the company is reporting some good news. Also get some guidance as far as 2008 is concerned. $56.8 to $57.8 billion for revenue next year, $1.69 to $1.73. Really, this is the kind of stamp of approval that investors probably needed to hear. Stock has been rallying for the last couple of weeks, really the last couple of months, and the rally continues after market based on this this report here. Maria, back to you.
Sure does, Jim. Thanks so much. Up 2% on Microsoft right now. We are back with RBC Capital Markets' Abhijit Wallier. He rejoins us now talking about the Microsoft numbers. Your instant analysis, what did you think of the quarter?
Well, I think everything looks pretty good. The EPS number is a beat for the year, for the quarter itself, and I think what's important with the say in the call about growth, Microsoft's obviously done very little the last few years. It's been a low beta name, and I think it's time for a stock like this to break out. Again, they're trying to get in the right markets. It goes back to global growth, PC demand, which is where I think the theme is going to be for the second half of the year.
Yeah, but Abhijit, this is not a new story. Let's face it, Microsoft has been around this level for 5 years straight. It has not moved. What is the catalyst to get this stock to break out now?
I think, of course, Vista is something which most people have underestimated. If you look at Vista adoption itself going through the second half of the year, most people are underestimating what it's going to do. I think that's going to be a big key driver for Microsoft. Also, the margins itself get helped by premium selling in emerging markets. In the end of the day, any stock or any company which has PC exposure for the next 6 months or so is where I think there's going to be multiple expansion along with earning estimates going higher. Microsoft is pretty much right now has not moved a lot. Based on that, I think it's one of our favorite stocks to own.
You talk about global growth really being key here to Microsoft. Tell me who its competitors are around the world. Do you worry that things are real competitive when you look at the global stage?
Well, I mean, it's in so many different areas itself. I mean, of course, Google's a competitor in search, and you've got Yahoo and obviously the other small competitors coming up in Asia as well. But in terms of the PC exposure with the software, I think they're pretty much, are the main play. And there's not many companies you can bet on beyond companies like Intel or other PC companies to play this PC cycle in the second half of the year.
Well, Microsoft is higher in the extended hours, and that seems to be what's going to set the tone for tomorrow. We'll see if this 14,000 momentum continues. I've got to turn your attention, though, back to Google. We've got a real situation developing here. This stock is plummeting, down 5.5%. $30 sell-off. What is wrong with Google? Tell me your thoughts on that quarter again.
I think, again, there's a lot of fast money got into stock. There was a bit of a miss, and people want to sell it on news. But I think it will set up for a pretty attractive entry point if it continues to sell off here.
Attractive entry point when? 519. How much lower can this stock go?
Hard to really say. I think we should wait for a couple of weeks. I think it's not a day-to-day, it's a weekly phenomenon before we start to look back to Google.
But they've really got to capitalize on the global situation.
That's right. That's right. The commentary in the call is key. What they talk about, what the long-term plans are. That's what really will make me like the stock here.
All right, we will continue looking at the technology earnings. Thanks so much, Abjit. We'll be back to you, and we appreciate you joining us for the entire program today to discuss this technology roundup of earnings. Back to our market discussion. Michael Morkos, you're there, portfolio manager at Old Second Wealth Management. Tell me how you've changed your strategy in the last 6 months as we have been watching these records shattered.
Well, we really haven't changed our strategy that much, Maria. We've been pretty bullish on this market. There are certainly some concerns out there. You've got oil and subprime, but for the most part, valuations are very reasonable. Global growth is exceptional. U.S. growth is pretty good, and inflation is contained. So we've been bullish on this market, and we continue to be.
You have been overweight energy. Good call, obviously. Industrials, good call, obviously. Tell me the issue with energy. We're going to be talking in a little while, a couple of minutes, with Lee Raymond, the former chairman and CEO of ExxonMobil. Give me your thoughts on energy alternatives and really what, if anything, turns this bull story in oil around.
Well, I don't think much is going to turn the bull story around. There's just not enough supply out there and to meet demand, and global growth and the global infrastructure build-out is not played out completely yet, and the demand for oil will continue. It's possible that at these levels some of the stocks have gotten a little frothy or a little bit ahead of themselves, so I wouldn't be surprised to see a correction, but I expect the energy bull market to continue.
Ron and Sana, 14,000 on the Dow Jones Industrial Average. You have been watching many milestones on Wall Street. What do you think happens tomorrow? You think that the momentum continues with regard to Dow 14,000?
Well, Google and Microsoft will have a battle going on in the technology sector, Maria. I think what's important is that, the financials that you've been talking about rolling over as they have been, I think we have to watch that extremely closely for a couple of reasons. One is that they usually provide leadership up, and it's important that they do so. If they fail and continue to decline, it would certainly presage that anytime correction that Tim Grisky was talking about earlier. The financials are now more than 20% of the S&P 500. That's the highest percent they have been. They're 5 percentage points ahead of technology. And financial services now represent the largest portion of GDP that they ever have in the history of the American economy. So if there is a correction there, I'd start to worry about a correction, not a bear market, but a correction in stocks.
Well, that leads me to my next question, Tim. Can this market continue this amazing momentum without the financials?
No, I think Ron's right. I think you need to see the financials begin to participate here. They've been in a big slide. We're underweight the sector. The headline news isn't good for that sector, and the stocks do have to turn around. I think eventually we've got to see bargain hunters move in, and I think financials are ripe for that value investor to move in.
All right, we will leave it there, gentlemen. Nice to have you on the program.
Thanks.
A great day on Wall Street, certainly for the bulls, and we are watching the momentum continue. We will talk with you very soon. Up next, solving America's energy challenge. A high-profile advisory panel is making some tough recommendations.